types of liquidity in 3 different videos. So today we have type 1 of liquidity, where we will talk about majority of the liquidities you know till now, which are something as equal, like all the retail traders liquidity, basically, if I just name them. So when starting with this, we have, first of all, as you guys know, I'll just write with the text liquidity, which is telling us that we have type 1, which says retail traders liquidity. So this is the most important like one of the most important liquidities in the market, not most important. Okay, so this liquidity, what you will see in the market is the people who are doing the retail trading, who are just trading the support and resistance, have their stop losses. Now if I go deep down to what is liquidity, liquidity is basically this is the main factor, the main key factor to move in the market. Market moves only because of the liquidity. Okay, if there's no liquidity in the market, there's no movement in the market. Okay, and for saying this, when I comment this thing, you should always remember that liquidity is shifted. Okay, liquidity shifts from one structure point, or maybe say one part of the market to another part of the market. Okay, and when this liquidity shifts from one to the other zone, yeah, the zone is a perfect word for this. So when liquidity shifts from one zone to the another zone, that's how we have to trade. Like, we have to wait, we will mark two zones. Okay, then we will wait for which one zone has been taken out, and from there we will target the another zone. I hope you got me. If you don't, no worry to get sad on it, because in deeper lectures, in the lectures which are coming in the future, I think I'm gonna explain it to the whole detail. Okay, so when I'm saying about retail liquidity, I'm drawing this good box where I'll show you about every single liquidity which is in retail trading. So the first liquidity which we have is equal highs. So this is something what you will see usual in the market, and you will ignore that. Okay, that's a resistance area, and the third time when market will hit, it will go drop. But no, it doesn't happen like this. What eventually happens is the market just takes that out and then drops it. And I know there are retail traders who are watching my video, which they have been like, okay, these are the things which are happening with them. Okay, so this whole level where whole resistance is made, this is all a liquidity, simple and easy. It's a liquidity. Okay, and market movers, the ones who are moving the markets, want your money to be taken out. Believe me guys, when I'm saying this, I used to be a retail trader and I have lost ton and tons of money, like shits of money, and I've lost like 5 to 6 profit accounts with dealing with the same thing, saying that okay, this is the resistance. What I used to do is in my personal, that okay, the 5 minute resistance is not working, I used to go on 15 minute, or 15 minute resistance is not working, okay, I have to go on 1 hour, 4 hours. So this all things messes me up, that why the market goes in my direction but not take me. What's the main point? Why am I lacking in this? So the main reason for this is because this is called as liquidity, and liquidity means money has been put over here. Like most of the retail traders, if you're watching retail traders, so this is the point where you'll enter, suppose, and this is when you put your stop loss, as this is a resistance. So this indicates that this is the point where if the banks or the market makers move like the market to upside, they will grab all your money which you have lost. Okay, so let's say your stop loss hit of $100. Okay, and there are like thousands of retail traders, so 1,000 into 100, which means that they have $1 lakh as a money which has been stolen from your like you guys. Okay, and then they will just distribute it. So whenever you see a resistance, or let's say this is also a liquidity called support. Okay, now when I'm saying that these are the liquidity levels, just remember that that's the point where you don't have to take the entry. Resistance and support are all bullshit, bullshit and bullshit, pure bullshit. Okay, so see over here what market did. Market just first of all took the support for the people's retail traders who are buying from here, then straight went up. The retail traders who are selling over here, they just market went up and then took them out all and then shoots up to the down direction. Okay, so this is the most important thing which you have to know about this. And liquidity type 1, which was equal highs, is explained in this way, and same we have equal lows. Okay, so whenever in the market you see equal highs and equal lows, remember one thing, that is a liquidity. Okay, for the live example for this thing, I'll show you. Wait a second. Everything I'll show you is a live example, so don't need to worry about that. First of all, I am just marking, and in the future you can take a screenshot, or you can just come to this, watch this video again, no problem. Okay, then the second most pattern which we see in the market as a liquidity is this one, where the market is making a trend line. Okay, so this is the second stop. Now when the market comes to the third touch, people think that this is a support and market will touch this and then shoots up, but what eventually happens is market takes it. So what's this? This is called trend line liquidity. Trend line liquidity. So this is also a form of liquidity. So if market used to go in your direction without taking you, that means that you were the liquidity in the market. So this works in vice versa also. So if you have like a trend line over here like this way, I'll make it, so no need to worry. Like if the market is making something like this, then this is also a trend line liquidity for you. Okay, so this all is a trend line liquidity which will be taken out. Remember this thing. This is the second type of retail liquidity, which is what we have shown. Now third type of retail liquidity is all the patterns which you see. These are all bullshit patterns, all bullshit patterns which you say that uh, flags and like breakout structure strategy. No, that's not how it's going to be. When you are using something as a fixed trading plan to move the market, to make the market align with what your analysis is, you have to think differently. You have to think that where are all the majority of the people are putting their trades, and you have to post against them. So let's say everyone is putting a sell at this position, which means that that is creating a liquidity. So for you to not be in that, you have to put a buy. Okay, as just an example, or you have to put the sell after once they have been swept off. Okay, so these are the three important liquidity points which we have in the market, and which are the most important points in the market of the liquidity. Now trendline liquidities and equal high equal low liquidities are some retail traders thing, and now I'll show you these all things in the live market, that how you see them at the particular sites. So if you see, guys, just a second. I'll just go, it's a 15-minute time frame. Yeah, that's a good, very good time frame to see all good liquidities. Now just a second, I'll show you. Yeah, so see over here we have this equal lows over here. So people will be like buying from this zone, saying that okay, this is a support. See this one. Okay, it concludes with this also. So this total is a one touch, second touch, and people will be like, okay, market is in bullish move to the upside, market is breaking structures to the upside. See, it's break of structure to the upside, break of structure to the upside. So which means that okay, one second touch, so means this is a very valid support, and here the market react to this support, and then boom, you are taken out. The market will take you. So if you enter over here putting a stop loss just under, and then aiming for something as like this, you are going to be taken out. Why? Because it's a liquidity. Okay, so this is the one liquidity which we say as equal lows. Okay, same I'll show you about equal highs. Just see first of all this. Okay, so what we have over here, if you see it, you'll get to know we have a trend line liquidity where it's over here. See, trend line liquidity. Why? Market has made this trend line to look like a resistance. One touch, then broke the structure, came to down, second touch, then you will be like okay, at the third touch when the market is coming over here, you are ready to sell. But no, that's not the case. If you put a sell over here, put your stop loss at this level, you'll be taken out. Why? And see, if you see, once your stop loss taken out, market actually comes to your entry. Okay, so why this is happening? And see, over here the market came to the TP. Why it's happening? Because you are liquidity, you are the ones who are getting tapped in again and again, and that's the problem of it. Okay, now we have learned about liquidity of two things, which is trend line ones and equal lows and equal highs. Okay, now the third one is the patterns. So if you see over here, we have a pattern known as flag, something as flag downward, and you say that if it breaks the structure, retest, and then we are ready to buy. If you see over here, it broke the structure, straight went up, and then boom, came down. Why? What's the case? Okay, and if you say that, okay, this is the break of structure in the market, after breaking went straight down, no, that's not the case. Market breakdown and then went straight up. What is the problem which happened over here? So you have to keep these levels in mind, keep this thinking in mind, that whenever you are seeing these types of liquidity, you have to almost avoid all the type of liquidity like this. Because why this is formed? This is formed to make you feel that, yeah, it's a very good level to buy or sell. Now if you see over here, I'll make you one more point, and this is equal low. This is equal low, which is liquidity. Why? This is a very good support to look for a buy. If you failed it over here, then the market will again come to this level. Market will show you a little reaction, and then boom, your stop loss is taken, you are out from the market, and then again goes to your direction, then again takes a stop loss for the one who are re-entering in the market, that yeah, after stops we are ready. The ones who are like, okay, one more ahead level, that yeah, we'll sell. No, he's not ready to sell, not ready to sell. Oh, sorry, buy. Okay, so this thing, keep in mind that you have to not be a liquidity. A second type of liquidity which I'll tell you is about smart money liquidity. So there are, I know there are many people who are smart money traders who are watching this video. So don't worry, in the second part I'll tell you what are the smart money liquidity which we have in the market. So why the money which we have in the market, which you trade, the smart money people, is why you're hitting a stop loss, and then the market is going in your direction. Okay, the same thing which you're going to go. So before ending this video, I just request you all to please like this video, and then subscribe to my YouTube channel. It's going to be a great help for me. I'm just it motivates me to make more content and share with you guys. And my end of the day markup series are going to start from today only, and from today I'll going to post it more often. Okay, I'll make sure that I'll post it on daily basis, so that you can get a daily